This video is sponsored by OKCoin Crypto Exchange. Why pay ridiculously high fees to Coinbase, Kraken, and Binance when you can use OKCoin, which has the lowest fees, guys? So if you want to save money on buying and selling and trading crypto, definitely have to use OKCoin. Sign up, link in the description. Hi, everyone. Welcome back to the Thinking Crypto channel. I have Fred Thiel, who's the CEO of Marathon Digital Holdings. Fred, it's great to be speaking with you today.
It's great to be here.
Fred, how was the Bitcoin conference in Miami? I believe you attended, correct?
Yeah, it was pretty amazing as a conference after a year and a half of lockdown for COVID, having 12,000 people in one venue, pretty much all demasked. Was a pretty awesome sight to see. People from all walks of life, all industries. There were senators, there were politicians, there were business leaders, bankers, Bitcoin maximalists, some people who were skeptics. Tony Hawk was there doing skateboard demonstrations. It was quite an amazing event, and I really appreciated the opportunity to be on stage with Kevin O'Leary and the rest of my colleagues in the industry. And it was a great event. I came away from it feeling more and more energized just about the industry and kind of what the whole community is doing.
Yeah, absolutely. And to your point, there was a mixture of folks from different backgrounds, which is amazing, and how Bitcoin and crypto has brought these different folks together. Let's talk about your background. Where are you from? Where did you grow up?
So born in France, parents are Swedish, grew up short period of time in the States, then high school in the UK, and university in Sweden, and then lived in South America for a while, and then came back to the States in the just before the 90s.
Wow. So you've lived kind of across the world in different continents. So tell us about what you did before you ended up at Marathon.
Sure. Yeah, I've spent 40 years in the tech industry. I started writing software for commercial banks when I was in high school in London. So I was originally a software engineer and worked my way, went to the dark side of sales and marketing from engineering, and worked my way up. Really been in kind of every segment of the technology industry: software, hardware, big iron, meaning super mini computers, PCs, embedded tiny computers. I've had the good fortune of being able to, as a CEO, take companies public, do a lot of M&A work, and then spent a period of time running a private equity fund focused on really technology companies and primarily software companies, and the transition from perpetual license to SaaS. And then spent a period of time advising some of the large global PE and VC firms. And I got involved with Marathon back in 2018 by joining the board. The former CEO and now current executive chairman, Mariko Komodo, is a friend of mine from many years back. And we'd always talked extensively about kind of blockchain and crypto. And when he stepped into the role as CEO, he obviously wanted to have some people on the board who understood the business that he was taking Marathon into. And so I had the honor to serve with him on that board and help work with him in support of executing the strategy that led Marathon kind of to where it is today. And so it was a very natural kind of change in roles for me to slide into the CEO role, and for Merrick to kind of stay up at the executive chairman spot. So it's been a great transition. Obviously a big believer in the company and the crypto industry as a whole. Crypto is one of those unique disruptive technologies. When I mean crypto, I'm really talking about the blockchain, all of the layers, and then obviously the digital currencies. It is as disruptive as the internet. I think many people would say that we are in 1995. When you kind of look at where the internet was in 1995, that's about where we are with the crypto industry. And I think you've got lots of new and exciting things that are going to happen. And I think you're going to see a handful of the core networks kind of dominate, Bitcoin, Ethereum, and we'll see who number 3 or 4 is. And then you'll see lots of side chains and layer two businesses built on top of that, like DeFi, smart contracts, all of those types of things. So I think we're at the very beginning of what is going to become a massive industry.
And what was your first encounter with Bitcoin and crypto? And what was your aha moment? Like, wait, there's something here. And to your point, how big this will be.
Sure. Great question. So if you kind of think about what I've done in my life and kind of the world I came out of, I've spent a lot of time in the fintech space from a perspective of doing software development with banks, providing systems for banks. One of the companies, the private equity fund that I managed, owned, was in the commercial lending automation space for major banks. And you spend a lot of time in the industry, you realize there's a lot of friction. I also had the benefit that my stepmother was a senior economist for the OECD, responsible for working on the entrance of Russia and the East Bloc states into the OECD and then into the EU, specifically around banking and securities regulations. And so I grew up in an environment where regulatory frameworks and the friction in the financial markets was kind of dinner table conversation.
Wow.
And so on the one hand, I had a big understanding of all the friction that was involved from my what I had done on the technology side, and then kind of from the exposure through the family. And when blockchain came out, the aha for me about blockchain, less about Bitcoin, more about blockchain. If you think about how the SaaS and cloud market works, companies have moved from taking the technology that was in their glass house behind their firewalls, and they've now effectively delegated the responsibility for security of their data and operating their applications to the cloud providers. But that means the data is still behind somebody's firewall. If you instead take data and move it to the blockchain, and you tokenize it such that people who shouldn't be able to can't read personally identifiable information. It might be medical data, it might be personal identity data, it might be personal financial data. But if you tokenize data that is on the blockchain, and by tokenizing I mean it's a way of encryption, it's not about monetizing it. But if your data is on a blockchain, then you've taken power away from the cloud providers back into the consumer or the corporation's hands. And now they can deploy all sorts of products, applications, services against their data to monetize their data and also to make their data more valuable and more insightful for themselves in ways that you can't do when the data is all locked up in Salesforce or SAP or one of these other big ERP or cloud vendors. So I was very excited about that opportunity in blockchain. The financial markets was a key area where having this unalterable record of transactions, property rights, title, ownership, fractional share ownership, royalty rights. Just the applications were endless that blockchain could really provide a great incentive for. And Bitcoin is the most robust, most secure, and largest network. And my personal belief is that the largest network with the highest level of security is the one that will win, because that is the network people will trust. And if you look at the blockchain, the Bitcoin blockchain, it is very hard to make changes in the blockchain. In 2017, a group of miners who represented the vast majority of the mining hash rate tried to make a change. It didn't pass. Ethereum, on the other hand, is more of a centrally controlled model in that a smaller group of people focus on development and improvements to it, and there have been numerous forks and continue to be forks as it moves towards proof of stake. And so it's a different model. I'm a personal believer that the Bitcoin blockchain is much more secure, more robust, and is a better platform, especially now with Taproot signaling for deploying smart contract-like applications. And so I'm very excited about it.
So I have to ask, it's usually a commonly asked question by the users, what do you hold in your crypto portfolio? I'm assuming Bitcoin for sure. Is there anything else that you have that you can disclose?
Sure, just Bitcoin and Ether.
So let's talk about Marathon Digital Holdings. Of course, you guys do Bitcoin mining. Can you give us an overview of the history and maybe some of the services we may not know about?
Sure. So Marathon has had a couple of different lives to it, if you would. It was most recently called Marathon Patent Group, and it was really a patent troll that went and acquired patents and then monetized those patents. One of those patents is basically a voice assist patent that is a contributor to Siri and Alexa, and
Wow.
I believe Apple paid a license to Marathon for the Siri side of it, and then Marathon partnered with Fortress on other sort of patent litigation issues. But with the Alice decision in the Supreme Court back 7 years ago at this point, the prosecution of software patents became not a viable business. And our executive chairman got involved with the company late 2017, early 2018, and had to find something to do with the business. The going out and chasing people for patents wasn't a viable business anymore. And so we developed a strategy around going into the mining business. At the time, Marathon was severely undercapitalized, had about a $4 million market cap. I think the stock was trading at 30 some odd cents. And it was really very difficult to figure out how to get in the mining business, which is very capital intensive. And again, remember the peak of, you had, December of 2017, a peak price of Bitcoin, and then crash down. Yeah. And so all of a sudden, the mining profitability wasn't very high, but you had access to a number of people who had bought machines on credit, couldn't pay for it. Those machines came up for sale. Marathon was able to secure a small number of miners and sort of get into the mining business. And like most businesses, iterated and learned and figured out, about hosting, figured out about energy, figured out about mining hardware, and sort of started progressing. And then, Mariko Komodo was able to execute a brilliant strategy to recapitalize the business that allowed the company to essentially raise close to $500 million over the course of a year, eliminate all debt. And then as a company, we made the decision, quite the sort of ballsy move, if you would, back last year, to place a very large order with Bitmain for a huge amount of miners, something that sort of wasn't at all common at all. And now everybody's kind of emulating this process as a way to kind of lock up a large percentage of the prospective global hash rate. And so if you look, the extent of that order, we'll essentially be deploying over 100,000 miners over the course of the next 9 months. At this point, we've already deployed about a third of them, and we're continuing to deploy the rest. And as you saw our announcement regarding the energy deal we did with Compute North, so 70,000 of our 100,000 miners will be carbon neutral energy sources, and the facility we have in Hardin, Montana, which is a coal facility, will move to offset the carbon impact there over the course of the next year and a half, pretty much. So we plan to be fully carbon neutral kind of by the end of next year.
That's amazing. Congrats on the growth there. And you mentioned Montana. Are there other parts of the U.S. as well as North America that you have mining locations?
So we're currently mining in Montana, Nebraska, a small number of miners in Nebraska, and then the next big facility will be in Texas.
Wow, it seems like a lot of mining operations are going to Texas, and I have to ask, as maybe I'm a bit of a newbie to the mining aspect, but is it because of the solar energy, or is it any type of benefits? I know Texas, the governor just signed a really great crypto regulation law into place. But what's the incentive to be in Texas?
So anytime you're doing project finance type deals, so whether you're building out North Sea oil, or whether you're building solar farms, or whether you're establishing crypto mining operations, the rules and regulatory environment in the state you're going to work in are critical, as are what energy options you have. Texas has the benefit that it has great wind energy. It has outstanding solar energy opportunities. Actually, I think wind is a bigger opportunity for Texas, and I'll get into that in a minute. And then you also have other forms of renewable energy that they have. ERCOT, which is the kind of Texas power operator, if you would, is able to provide power purchase agreements to companies where you can effectively decide the blend of power you're going to have so you can get it as carbon neutral as possible. You have obviously large amounts of land in Texas that make it an attractive place, and you have a government, state government that is very open to crypto and mining. The state of New York, for example, which is where many miners have operated in the past,
Right.
recently put forward a bill to effectively put a moratorium on mining. That bill has now been modified and kind of defanged a little bit as it went into the assembly, whereby they're going to effectively ban future mining that's fossil fuel based. So we'll see kind of where that ends up coming out. But it's really important to be in states that have very supportive legislation and in states where power is not just inexpensive, but is ample and in great supply. If you look at the world's power supply today, 28% of all electricity generated on Earth is from renewable sources already. Mm-hmm. So by the end of 2025, a short few years in the future, it'll be over 33%. And that's on a global basis. The U.S. is moving very strongly in that direction, as is Europe. Other areas of the world still rely much more on types of fossil fuel. But I'm very optimistic about the fact that we'll be able to continue to drive renewable energy in the U.S. to become a majority of the power that's generated and consumed. And miners are a huge driver of that energy deployment because we're the buyer of last resort for all that excess power. Electrical energy produced from the sun, really you have an optimal sweet spot of kind of 10 a.m. You peak out around noon, 1 o'clock, and then it decreases over the course of the afternoon. Wind energy typically is in the afternoon and into early evening. In West Texas, however, you have the benefit that the wind blows almost 24/7. So wind energy in West Texas is great. I think you can read lots about all the offshore wind energy that's being planned and deployed off of Martha's Vineyard, off of Rhode Island, and other places on the East Coast. I think we're going to see some of that on the West Coast as well. So I'm very optimistic about energy being very available and looking forward to kind of seeing how we can help the energy industry really work on that.
Sure. And you currently mine Bitcoin. Is there plans to mine other cryptocurrencies, or, right now it's just Bitcoin, given its brand recognition, safest network, or more secure network, and as well as price, or is there plans to maybe add other proof of work cryptocurrencies?
Sure. Great question. So I think many people misunderstand what mining really is. Mining isn't a goal unto itself. Mining is actually the verification of transactions on the blockchain. And for that, we're paid a combination of rewards if we happen to be first to solve a block and first to guess a number, and also transaction fees once we win that block. And so our business is really about securing the blockchain and the viability of the blockchain. And for that, we're compensated by Bitcoin. So mining isn't this process where you're out digging holes to get Bitcoin and then you sell them. You're actually operating the blockchain. Without miners, the blockchain doesn't exist. In the world of Ethereum, they're moving to a model of proof of stake, where if you think about it, in the Bitcoin mining world, companies like Marathon deploy huge amounts of capital and invest capital to fund these miners that are continually calculating and verifying the blockchain. In the world of proof of stake, you're deploying capital kind of almost like a bond, a surety that what you're going to validate is correct. But because you don't have the huge capital cost related to mining equipment and this kind of very robust model where it's very hard for anybody to implement change, the Ethereum proof of stake model is potentially vulnerable to people who just can deploy large amounts of capital and then impact what types of transactions are validated or accepted. So we believe that Bitcoin is kind of the sweet spot for us. Also, as you move to proof of stake, mining is less of a purpose, if you would, in the Ethereum world. So it's definitely not a marketplace we're going to go after, at least today. And we'll have to see. I think there are a lot of opportunities. There'll be a lot of interesting side chains to the Bitcoin blockchain, especially now with Taproot. I think you're going to see a lot of interesting applications deployed where the Bitcoin blockchain becomes the settlement network for these transactions. So I'm super excited about that. But I think we have a lot of work still to be done in the Bitcoin blockchain world, and we prefer to be focused.
So tell us about the Bitcoin that you mine and the volume that you're currently accruing as far as Bitcoin daily, as well as I'm sure you guys are hodling some and possibly selling some to fund the operations. And are you selling to institutions, and what type of institutions are you seeing demand from?
So what I'll share is the publicly available information. That's the nature of being a public company is we always have to be careful about what we say and how we say it, where we say it, so that it's all done properly. But what we have said recently is we crossed the threshold where we're mining on average, more than 10. We're essentially generating rewards of more than 10 BTC a day. Our deployment of miners is fully public and transparent, so anybody who wants to can kind of calculate what our hash rate should be as we deploy these miners, and see kind of where we should be in the overall scope of things. There have been some days where we've had considerably more than that, and other days where it's less, but it averages out to about 10 per day. But it'll increase as we continue to deploy more miners. In that regard, we do not sell our Bitcoin. We hold 100% of it, and we have even gone into the market in January, and we bought $150 million worth of Bitcoin at an average price of around $31,000 in January. And we're holding that too as well. So we have over 5,000 Bitcoin on our books today and continue to add to it every day. And we are not selling Bitcoin to pay for operating expenses. If you were to look at our kind of balance sheet, we have essentially close to $500 million in liquid assets and no debt. So we're doing quite well and able to fund operations out of our just cash holdings.
That's amazing. So I do want to talk about a big topic, and it involves Elon Musk, and that's ESG. Do you see that as some knee-jerk reaction from maybe the traditional asset class world, and because Bitcoin and crypto is now a competition to it, and Elon possibly being incentivized due to the green energy credit and things along those lines? Can you give us, what's your perspective on this whole situation with ESG and the Elon Musk situation?
So let's separate Elon Musk from ESG for one thing. Elon is a very influential person in social media. A lot of people follow him. What he says, people react to, and he has the power and has been proven to move stock prices and cryptocurrency valuations. So that's one thing. And obviously he runs a business that is in the renewable sector, both the Solar City piece of Tesla as well as the electric vehicle part of Tesla. So he has a fiduciary obligation, I think, to being focused on renewable energy and green. And I'm sure his investors hold his feet to the fire on that.
Sure.
As regards to ESG and the mining industry, again, most people don't realize that the Bitcoin mining industry has already made great progress towards carbon neutrality. I've already talked about our numbers and our objective of being 100% carbon neutral. The fact that we're rolling out our next, 70,000 miners on fully carbon neutral power. Most of the miners are already doing that. A number of the miners are already 100% renewable energy. So I think you'll see as the Mining Council, which is an organization that's kind of in formation, which is open to all miners across all industries. Our goal with the council is to really educate the marketplace and educate people on how Bitcoin mining uses power, what sources we use, what our commitments are to making our mining operations carbon neutral, and then publishing data so the public can see what we're doing in that regard. So I think transparency is going to be very critical. ESG is a story like any other story that becomes relevant in the press. It's an important story, but I think institutional investors have are very big believers in wanting to put their dollars to work in ways that help the environment and enforce kind of proper social and governance issues. That being said, if you were to go to an institutional investor today and say, I have Bitcoin A, that is a vanilla Bitcoin, and I have Bitcoin B, that is 100% sourced through green energy, would you pay more for Bitcoin B? They will tell you no. I won't pay more for Bitcoin B, but I prefer Bitcoin B. I'm just not going to pay for it. So I think what you're going to see is that the industry is going to move towards, more and more green energy sources and go to a sort of full carbon neutral model. And the plain vanilla Bitcoin will effectively be green over time.
From with the ESG, what I would consider FUD, because when you look at energy usage across what we do as a society, as a civilization, there's a lot of waste out there. And I think to your point, like the Bitcoin Mining Council being more transparent, putting out data and showing the comparison will help people to understand, okay, I get it. What's being used by Bitcoin miners, renewable, and so on and so forth, compared to the massive amounts of energy that's being wasted in other aspects of society. Do you see this ESG narrative going away in like maybe 6 months or so? Is this something that's going to be around for a while? What's your thoughts on that?
Well, I think as relates to the Bitcoin industry, let's start there. The anti-Bitcoin talk track before was, it's used as a form of, as a way for criminals and terrorists to fund their projects. It took a while, but eventually people realized that there is less nefarious activity going on in the Bitcoin world than there is in the US dollar. There's much more nefarious activity done in US dollars than there are in any cryptocurrency. So I think that story eventually died out. And there are constantly people looking to come up with the next story. You will always find, for example, people who are very much gold enthusiasts saying that gold is a real store of value and Bitcoin can't be a store of value. You find people like former President Trump saying Bitcoin is a scam, and these memes and these stories kind of get energy around them. And the ESG story, it's an important story, don't get me wrong, but I think sometimes participants in marketplaces who want to move things certain ways will glom onto stories and leverage them to their benefit. And it certainly didn't help that the tweet that Elon put out was talking primarily about coal energy, and coal energy is something that's used in China predominantly for coal mining, for Bitcoin mining, and much less so by miners in North America and Europe. So it was kind of, I won't call it misrepresentation, but it was, you give somebody you make a generalized statement about anything and people interpret it in a broader sense. And I think, that's one of the challenges we have today around media, and why it's so important for programs like yours, where you really go into depth and analyze what's going on, so people really get more than just the soundbite and the kind of headline that can be taken out of context and misunderstood. It also doesn't help that the crypto mining business is something that most people aren't really familiar with how it works, and they couldn't really describe the process of what it is we do and how we do it. And so it's easy to glom on to kind of stories like, it's the crypto industry is consuming more energy than a country. Well, yeah, but banks consume 4 times the energy of the whole crypto industry just to provide, fiat money. And so it's not a fair kind of comparison.
Yeah, I think there was some statistics around at Christmas time, the amount of Christmas lights that we all put up in our houses and the energy that uses, it's more than other smaller countries as well. So it's just lining up all these different data points and doing a comparison, and you see, okay, It measures up accordingly, and it's not as crazy as people might think it is. Like, oh my God, Bitcoin is using so much energy. Well, compared to what? And making that comparison, having those data points will certainly help.
I mean, just look at the simple fact that in the U.S., we generate as a country and consume about 4 terawatts of energy per hour, right? It's 4 terawatt hours. That's the total power generation, and it's the total power consumption because you can't store energy effectively yet. So of that, 5 to 8% of that energy is lost in just transmission lines. So think, high voltage lines and power transmission lines. That's 200 gigawatts. If you only use 5% as the number, that's 200 gigawatts of electricity is wasted just through loss. A Bitcoin miner like ourselves at full deployment, when we're fully deployed with our mining fleet early next year, will maybe consume 500 megawatts of power. So, just the amount of energy that's lost in transmission lines a day in this country is more than enough to run most of the Bitcoin mining miners in North America. So, we really are using energy that otherwise would be wasted.
Yeah, absolutely. So I want to ask you something, and this, I'm not sure if you'll be able to speak to this because it's just not as clear yet, and I don't like to go down the route of conspiracy theories or rumors, but it seems that despite the US government still trying to provide clear crypto regulations, they are allowing mining in the States. And we've heard that China, with the Bitcoin mining there, they have a large amount of the mining pools there. Do you see kind of a macroeconomic battle for the control of Bitcoin's hash rate, given Bitcoin's prominence, given the news we heard from El Salvador, that the US is not going to let China have the majority or control the majority of the hash rate there? And I could be wrong in my phrasing of that, but I want to get your thoughts.
Yeah, I'm not going to comment on the conversations that the White House is having with the Department of Energy on the one hand, and with DOD and the NSA and the Department of Homeland Security. But there has been a concern in the community as a whole, the Bitcoin community as a whole, that too much concentration of hash rate in a country would enable the country potentially to enact laws and regulations where something could potentially happen to jeopardize the safety and stability of the blockchain. The fact that China has begun to outlaw mining in China based on a combination of things. One is obviously coal, and the fact that most Chinese miners use coal for at least a good portion of the year, and then in some portion of the year they're able to use hydro on a seasonal basis. But the bigger issue in China is not so much the compliance with the Paris Accord and climate accords. It's really more about the fact they've just launched a central bank digital currency, the yuan, which they want everybody to adopt and use. Bitcoin is transparent, but it's also borderless. It's also decentralized. And having the ability for the populace to move capital electronically at the touch of a button without any on and off ramp that they're able to control is something any centrally controlled organization dislikes. And so I think China's moves to really ban crypto mining and trading are really more around currency control things. The U.S. government, I think, is most probably feels good about the fact that a lot more mining capacity is moving towards the U.S. and North America. Canada has a lot of mining going on. The U.S. will have it. I think we're going to start seeing, like in El Salvador, as countries open up and make Bitcoin a legal tender, which was a huge event. But El Salvador has very good geothermal energy, 100% green, 100% renewable, and ideal for mining Bitcoin. So I think you're going to start seeing countries that have very inexpensive forms of energy that don't have an ability to monetize that energy by building large transmission lines and selling it to consumers, wanting to invite Bitcoin miners to come and mine and take advantage of that very inexpensive renewable energy. Bitcoin is the single best way for converting energy into money. And what I mean by that is, think about an airline. How much money do they spend on energy?
Yeah.
And how much profit goes to their shareholders for that? It's very little. In the Bitcoin mining world, if you think about our financial models, we transfer a huge amount of the value from the cost of energy into something much more valuable, which is Bitcoin, and significantly more valuable. You just look at what our cost of energy is versus what the value of our rewards are, and you'll see we are the best battery actually for energy that there is. We're an economic battery for energy.
So we're seeing a trend of companies, corporates adding Bitcoin to their balance sheet. We see a lot of hedge funds, Wall Street firms. You have your Paul Tudor Joneses, your Stanley Druckenmiller now turning bullish on Bitcoin, adding it to their portfolio, and El Salvador making Bitcoin a legal tender. Do you see central banks and just even regular banks adding Bitcoin to their balance sheet if this trend continues?
Well, absolutely. I think you're going to see two things with banks. You may have seen the announcement a few weeks back that FIS, which is a large provider of core banking systems for banks, has announced a partnership with NYDIG, which is a financial institution in New York that has a whole crypto trading, custody, and set of services, to provide 300 million bank accounts with access to Bitcoin custody, buying and selling. So think about what PayPal, Venmo are doing. Now all of a sudden, 300 million bank accounts will have that capability when the banks turn that on. So that's a huge opportunity for consumers to be able to, in their normal course of business, not have to open an account on Coinbase or Gemini or Kraken or Binance, but literally just be able to, on their app on their phone, their mobile banking app, buy, sell, and hold crypto, which is going to be huge, I think, for the industry. I think the U.S. Federal Reserve will issue a form of digital dollar, which will primarily be used for payments and settlement as a way to replace the SWIFT network, which is very antiquated. It's a system from the 70s that is kind of like a telex system that just happens to work over the internet these days. But it's very old and needs to be replaced. Businesses and consumers want to be able to settle transactions instantaneously, as opposed to over the course of 3 days. Even with ACH today in the U.S., it's still difficult to get things settled the same day. So I foresee, the central bank issuing, some form of digital dollar on some platform. The U.S. Needs to do it also to defend its position of the dollar as a reserve currency. A lot of nations today are moving away from dollar holdings. Russia has announced that they're liquidating their U.S. Dollar reserves. China has been doing some of that. I think you're going to see more and more countries who don't want to operate in a dollar-denominated world do that. Now, there are two reasons for that. One is that if you hold reserves in U.S. dollars and the U.S. dollar is losing its financial buying power by 15% a year because of government spending, that's a financial decision. It's not a strategic decision. And if you look at what Michael Saylor has been advocating, and we're obviously very close to Michael Saylor and big supporters of what he's doing, by taking a portion of the treasury assets of a corporation or a life insurance company, et cetera, and allocating it to Bitcoin, it makes sense because it's an asset class that over time is going to be more and more impervious to inflation and is a great store of value for holding assets to make sure that they maintain their value. If you look at the inflation we're seeing in the U.S. today, it is asset inflation. We're now starting to see price inflation on consumer goods, more driven by supply chain constraints than anything else. But if you look at asset inflation, look at the price of homes, look at the price of land, look at the corporate assets and mergers and acquisition valuations. The valuations are huge and they continue to grow, and that speaks to the fact that the actual buying power of the dollars that are used to acquire those assets is decreasing. And so if you want to hold the value of your hard-earned money. You can choose to put it in dollar-denominated things. You can choose to hold it in assets like real estate, art, gold, stocks, whatever it might be, or you can choose to hold it in cryptocurrencies like Bitcoin. It's a financial decision, and you'll see that more and more insurance companies are starting to allocate 1% to 2% of their holdings to Bitcoin, and as stability starts entering the market, you'll see more and more financial products based on Bitcoin or including Bitcoin that will be used by investors so that they don't have to hold crypto directly. If you look at financial institutions, many of them can't buy crypto today. They're prohibited from doing it directly, but they can buy shares in ETFs. They can buy stocks in public companies that are in the Bitcoin space, for example, like Marathon and others. But it's this desire to have a set of financial products that are traditional and regulated, like ETFs, if you would, that most institutions are really looking at as the way, the on-ramp they're going to use for going into holding assets that are crypto-based. So if you look at the ETFs, one of the reasons, and you and I were talking about this kind of before we started recording, in the world of ETFs, the SEC hasn't approved ETFs because of their concern of, how will an ETF deal with the volatility in the price of Bitcoin and the need for redemptions and issuance. In a traditional world where an ETF's NAV is moving up or down 1% or 2% a day, the volume of transactions in that are manageable. But if you have Bitcoin moving up and down 10% in a day or 30% in a week, you have massive movements in and out of an ETF. And so I think part of the SEC's concerns around approving an ETF is just how will the ETF mechanically handle that? What safeguards does the SEC need to implement in regarding ETFs if that were to happen? And I think it's a lot of kind of foundational groundwork. I think sometimes it's better to take a little bit more time and study and figure out what you need to do than to just jump in and do something and then have it break, have it harm a bunch of consumers, and now nobody wants to do it anymore. So I applaud the SEC for taking their time, but I think that time is running and there's a lot of interest for these products, and I'm hopeful that they'll approve some of the first ETFs during this year.
Yeah, I think everybody's hoping it happens this year, and it seems it might be a high probability of that. And we're seeing ETFs get approved in Canada and other countries as well. I wanted to ask about, you were on the Twitter space with the president of El Salvador and the announcement of the Bitcoin becoming legal tender. For those who may still be struggling to understand, well, what does this mean if Bitcoin's a legal tender there? Can you give us your perspective on that and the significance of this event?
So the law specifically states that any participant in the commerce market, so think every store, every taxi driver, everybody, has to be willing to accept Bitcoin as legal tender. So not just the currency that El Salvador uses, which happens to be the US dollar, but also Bitcoin. And so people will be able to hold Bitcoin, go to the store, pay for things in Bitcoin. There'll be investment instruments available that are Bitcoin denominated. And it's a way to hedge against inflation. If you look in Latin America today, Bitcoin has been very attractive as a store of value because many countries have very high inflation rates. Look at Venezuela with an inflation rate of over 1,000,000% a year in some cases. The ability for people to take their earnings, convert them right away to Bitcoin, kind of gives them the inflation hedge. And then when they transact with stores and other people, they can either pay in Bitcoin or pay in dollars, which otherwise are very hard to get in Venezuela because of the way the government controls that. But once you have Bitcoin, it's easy to acquire dollars. So I think that's an area where you're going to see a lot of countries that have a lot of pressure, inflationary issues with their currencies. You're going to see Bitcoin as a kind of side channel for commerce be adopted more and more. I think also the thing to realize is that El Salvador as a country depends to a large extent, I think it's over 20%, for international remittances from citizens who are outside of El Salvador sending money home. And if you think about how most of these money transfer businesses work, they charge huge fees to transfer money from, say, the US or other places back to the home country. It could be as much as 50%. And the typical remittance is $150, $200 maybe, enough to send back to the family so that the grandparents can take care of the grandkids, whatever it might be. But by being able to reduce the fees that are charged by doing this via Bitcoin, having Bitcoin as legal tender, they effectively now enable more of the value of those remittances to achieve the goal of getting to the grandparents and the children that they're sending the money home to. And this is a big social issue, which I think is very important because there are a lot of charities, there's a lot of money that's sent all over the world for a variety of good purposes that just gets hammered by fees. So I think Bitcoin and digital currencies are a great way of solving that problem. The other thing they're doing in El Salvador, which I think was very smart, is they partnered with technology companies. In this case, it's Stripe, not Stripe, but it's, I forget the name of the company again, to basically deploy the infrastructure. So there would be an app anybody can use for buying and selling. So it's not that you have to now build that infrastructure. They're effectively partnering with technology companies to do that out of the get-go. So I think that's going to be a very exciting part of this.
I know some critics might say, well, hey, sometimes the fees get very high for Bitcoin at certain points in the network when the network's busy. Do you see like the Lightning Network or other sidechains being a solution, layer 2 solutions, to help improve the cost when the network gets busy? What are your thoughts on that?
Well, absolutely. I think what you're going to see is Bitcoin is going to be the settlement network that funds being transferred from one sidechain to another, one bank to another. That type of settlement or clearing will happen on the Bitcoin blockchain. And then there'll be sidechains where the highly intensive transaction processing of smaller denominated transactions will occur. So Lightning is one. You're going to see more and more things around smart contracts now. The Taproot has been essentially, I think Taproot will now pass now that over 90% of the people are signaling it. I think you're also going to see other platforms like Stacks and others who are bringing the ability to build really interesting DeFi type solutions on the Bitcoin blockchain to bear. And so you'll just really see the Bitcoin blockchain being a settlement network for these sidechains.
Got it. Now I want to ask, and it's okay if you can't to speak to this. Do you have a price prediction for this year? Do you see the bull run continuing? Obviously, we've had a correction, which is normal, healthy, and even in a bull market. And any year-end price predictions or anything like that?
Well, I'm not going to give you a firm price. What I will say is there have been a number of large influences on the price of Bitcoin most recently. One, and the most important one, has been a combination of when the price runs up very aggressively all of a sudden, and this is just like the real estate crisis of 2008, people who don't really know what they're doing buy in and think, oh, wow, everybody I talk to is making tons of money in Bitcoin. I've got to do it. It's at 50,000 and it's going to 250,000. And then a few weeks later, it drops to 30,000 and they've lost all the money they put into it. And in some cases, it's their life savings. And it's a horrible thing to have happen. But, when you have huge volatility in a marketplace, it's, investor beware, unfortunately. So had Bitcoin been climbing at a more sedate rate, I think you wouldn't have seen this type of correction. It's just whenever something jumps up in value very quickly, you're always going to have some form of reaction on the other side. And if you look at most of the selling that happened during the initial drop, it was wallets that had only recently been opened and people who had only recently come into the marketplace. If you look at the whales in the industry, and again, this is the great thing with the Bitcoin blockchain, it's all available. You can use Glassnode to look at this or any variety of free tools. But whales were still accumulating. And financial institutions, they're very smart and savvy traders, and they have their price points where they accumulate, and that price point seems to be around 30,000 today. So as that volatility has gotten kind of flushed out, and there was a huge amount of leverage that was being used to buy Bitcoin as it was going up because it was cheap and easy to do. So I think that's been washed out of it. Now, at the same time, you've had a large number of miners in China liquidating not just their machine fleets, but also liquidating Bitcoin holdings in order to buy new machines and relocate outside of China. So that has also had selling pressure. And you can kind of look at the pricing curves over a week period, and you'll tend to see seems to be a bit of, I'll call it temporal seasonality, depending on time of day and day of the week, which really indicates that there's been a lot of selling in Asia, and most of the buying has been in Europe and North America. So I think we're going to see that flush out here over the next month or so. And then my expectation is with news like what's happening in El Salvador, and as more and more corporates start getting to use Bitcoin as a way to protect some assets, you'll see the price start moving up again. The great thing about Bitcoin is there are only 900 Bitcoin made per day. And anybody who wants to establish a position, a company, a large, global company wanted to put $1 billion into Bitcoin, it would have a hard time collecting that Bitcoin without moving the price up. And they wouldn't do it on exchanges. It would be done through OTC desks.
Right.
But I think the tendency will be for the price to go up. How fast it will go up, that's up to interpretation. I think there are things that could accelerate it. More countries adopting Bitcoin as a form of legal tender will obviously accelerate it. The Fed coming out with a digital dollar and clear guidance regarding how they're going to not just deal with taxation of crypto, but also how they're going to deal with the regulatory environment around exchanges and consumer protections for DeFi. I don't see a lot of regulation around Bitcoin per se. There may be some edge cases, but I think predominantly the regulatory environment is going to be around things that touch consumers and brokers, dealers, exchanges, DeFi platforms where you're lending. It's all about protecting the consumer, I think, from a regulatory perspective. So.
Yeah, absolutely. Now, I want to ask, and it's a bit of a prediction question as to maybe the next big public company to add Bitcoin to their balance sheet. Michael Saylor has hinted to Apple, Facebook, Google. What does your gut say as far as who might come out next? Maybe Facebook, and we might see Google, Amazon sometime this year.
So I think it wouldn't be surprising to see that many of these companies actually have some small portion of their assets being held in Bitcoin. It just makes sense. If it's an immaterial amount based on the overall assets of the company, it's not something they would necessarily have to report other than in an annual report possibly. That's kind of something you have to look at. There was a big piece of news, I think, that came out today that Berkshire Hathaway just invested $500 million in a digital bank. Charlie Munger and Warren Buffett both are kind of not big believers in the world of crypto. Charlie Munger had stronger words than that. But, you go back to before Berkshire Hathaway invested in Apple stock.
Right.
They did not like technology. They liked brands that were consumer brands. Well, guess what? They took a big position in Apple and have made out very well with that. And I think you're going to start seeing Berkshire Hathaway start edging more and more, into this marketplace over time because everybody's going to have to come into the marketplace.
Yeah, absolutely. Yeah, I think I remember seeing a video. At one point, they weren't fans of gold either, and then they added, and to your point of tech stocks, they were late to the game there, but then they got into Apple. So maybe eventually we'll see some capitulation on their front. I want to get your take on where do you see Bitcoin and the crypto market in about 3 years, and maybe some of your thoughts as far as adoption, people using Bitcoin on an everyday basis. I'm seeing just in the states around me, Bitcoin ATMs popping up in different stores, and it's pretty amazing to see that happening.
Yeah. So great question. I think most Bitcoin ATMs are actually used for remitting money to other places because if you think about how they work, it's not about taking money out. It's about you put cash in, you then get a wallet, with the Bitcoin in it, and then you can remit that Bitcoin back home. So a lot of the users of Bitcoin ATMs are unbanked people who are taking their money and sending it back home because it's an easy way to do it, and you're not losing and paying huge fees by going to MoneyGram or one of these other transfer agents to transfer the money. But fact of the matter is that people want to hold assets in Bitcoin, and Bitcoin ATMs are just one kind of example of that. I think you're going to see tons of other products. The fact that El Salvador is allowing Bitcoin as an actual form of legal tender means you're going to see more transactions happening with Bitcoin there. The great thing with Bitcoin is it's totally fungible. You know, you can go all the way down to a Satoshi, which is an infinitesimal small piece of a Bitcoin. So Bitcoin can scale as its price goes up. It can scale in that regard. And I think you're going to find a lot of businesses being established as side chains that are going to enable some of this traditional commerce with Bitcoin. But think about it. If FIS rolls out this solution for banks where 300 million US bank accounts can hold, buy, and sell crypto, then there's no reason why you couldn't go into a store, pay with Apple Pay, Google Pay, or whatever your banking app is, and the merchant doesn't have to accept it as Bitcoin. They can accept it as fiat dollars, but it'll be deducted from your Bitcoin holdings. You know, one of the key things I think that is going to, or that needs to be kind of resolved for people to really start doing commerce with Bitcoin is the way Bitcoin is taxed. One of the challenges today is, you know, when you spend your Bitcoin, that is a capital gain from where you bought your Bitcoin, or a capital loss if you are on the wrong side of the pricing. As opposed to legal tender, which you buy, hold, and just spend, you're not having to worry about the tax implications every time you buy a pack of gum or fill the car gas tank with Bitcoin. So I think there needs to be some resolution around that. It might come in the form of just a connection between Bitcoin and digital dollars, and the ability to essentially have the back end kind of fund out of your Bitcoin holdings, your dollar holdings. But I think there needs to be some clarity on that, because today that's certainly an issue that keeps people from using Bitcoin to spend. They prefer to just hold their Bitcoin, let it appreciate in price, and then do yield farming and other things, and use the proceeds of the yield farming as a way to fund their day-to-day expenses.
Yeah, absolutely. And I remember, I forgot who put out the bill. It was either Congressman Warren Davidson or Darren Soto. So some of these folks who are trying to push for crypto regulations, trying to get a law in place where transactions below $600 would not be a taxable event. So maybe something like that can happen in the United States, but we'll have to wait and see what they roll out and eventually get to.
Yeah, I think if you put a limit like that, you know, okay, so I'm going to go buy a new Tesla for $80,000. I will do it in a series of 10,000 transactions.
Right.
I just think, you know, doing things like that are make it too easy to game.
Sure.
Maybe it's you know, having a background in the video game industry. Just how I think, but it's I think there has to be more clarity around really what is Bitcoin, and if it is a currency, because, you know, think about it. If you were to go around buying stuff with gold, which you can't do today,
Right.
you know, you would have the exact same issue. So, you know, is Bitcoin a currency, and should it be used for commerce, or should it be a store of value? You know, I think the regulators have to figure this out, and I'm sure they will.
Absolutely. Well, Fred, I want to wrap it up here with some rapid fire questions as we get to time here, such as, what is your favorite food?
Fresh fish or dessert?
Favorite musician or band?
That's tough. Coming from a bygone era, on the one hand, I love Yo-Yo Ma, but I also love Stevie Ray Vaughan, Eric Clapton, Neil Young, and, you know, there's a lot of new and modern music I like as well. So the best thing about the music industry today is you have almost infinite options of what you could listen to.
Sure. I'm a big Stevie Ray Vaughan and Clapton fan. I saw Clapton in live here in New York before the pandemic, so that was pretty cool. Favorite movie?
The Matrix, One Strange Rock, which is not a movie so much as a series that was on Apple Plus, narrated by Will Smith, which is really looking at our planet from space and how astronauts who've spent a lot of time in space, how their appreciation for Earth has changed. And it's a great story of the environment and the climate, and I recommend everybody watch it. I think it's a fabulously, beautifully filmed, and the story's great.
I have to check that out. Favorite book?
Oh, that's tough. I love historical biographies, and Winston Churchill is kind of one of the people I'd love to read about. I also, and this maybe comes from being educated in the UK, just the Wellington and the British Empire, that period, I think is just very interesting. History in general, I think we can learn a lot about what's happening today by just reading history.
Absolutely.
And,
Yeah, sorry, just because it's a thought I've been thinking about recently too with politics and things. History often repeats itself, and if you could learn a lot from how things have played out historically and not repeat the same mistakes. So, but I'll get off my soapbox. And finally, when you're not working a marathon, what are you doing as far as a hobby and for fun?
It's a lot of sort of sporting activity. Love scuba diving, sailing. I love helicopter skiing, but I also am a huge, fan of photography. So I spend a lot of time taking both stills and doing video, and just really enjoy it.
Fred, just an absolute pleasure talking to you. I've learned so much. Thank you so much for joining us today, and we'd love to have you back on as things progress on your end. And once again, thank you so much.
Thank you very much for having me. It was a pleasure, and I look forward to coming back anytime you want. It's hard to shut me up sometimes.